I will have ask everybody to mute if you haven't already. That will just help with the background noise. And we will have some time for Q&A as well. So. Okay, well, Vern, you're here as well. And I think it's 2 after 5. I think we just get this started.
Anyhow, thanks, Sarah, and thanks everyone for joining us tonight. Sarah came into my office about a month ago and said, why don't we do a webinar because of all the changes we've seen in the insurance market in the last 2 years. As most of you are aware, the rates have gone up substantially. Underwriting has tightened up immensely. And in some cases, it's very challenging to try to get an insurance quote. So what we're going to do is we're going to talk about the hard market. What is a hard market? Kind of explain why we are where we're at. Then we're also going to talk about what we see in 2024. What are the predictions for 2024? Also, we're going to talk about the ideal association in the eyes of underwriting, what an underwriter would like to see as far as an association. And then we'll also talk about some preventative measures that associations can do to help prevent themselves from getting into trouble when it comes into insurance renewals. And then we'll have some claims examples. And then at the end, we're going to talk about a couple of winners, a couple of associations that we had that got into some trouble, saw their rates go up 4 times as much and did what they had to do. And now they're out of trouble. So having said that, we'll talk about the hard market.
See if it works. How about that? There we go. Can everybody see the screen just fine, just really quick? Everybody got that? Okay, great.
So this is why we are in a hard market. And this has to do with insurance, property insurance across the board. First of all, weather. High concentration leads to increased property damage. What that means is because of increased population in metropolitan areas and just growing population, weather storms have come through and caused an immense amount of damage. In 2022, the insurance industry experienced over $1 billion out of 18 storms. This isn't including the wildfire claims. And some of those claims some of those storms exceeded that $1 billion mark as high as 30 and 40 billion. So we are seeing a pileup. In 2021, experienced similar claim experience. The good thing is 2023 wasn't as bad. Another thing we are seeing is the cost of repairs. Whereas before a claim, typical water damage claim may be $10,000 to $20,000. Now we're seeing them as high as $50,000, $60,000, $70,000. A lot of that has to do with the higher inflation, the cost for labor, cost of materials has increased substantially, and of course, supply chain issues. So a combination of those, we're seeing insurance companies paying out a substantial amount of money. Another issue is reinsurance. And what reinsurance is insurance companies buy insurance on their exposure. And we have seen the reinsurance market go up an average of 30% in 2023. And reinsurance are the carriers that pay for all of the catastrophic losses, including convection claims, earthquakes, floods, hurricanes. That's typically paid out in reinsurance. And all carriers purchase reinsurance on their exposure. So just because there is a hurricane down in Florida, it will affect our rates as well because of the reinsurance. And one of the things that we're seeing in reinsurance that's becoming real challenging is eligibility. Large frame wood buildings, especially in the condominium space, we're finding that rates for those have gone up quite a bit, or in some cases, carriers are choosing not to offer renewal quotes because the reinsurance cost is too high. And one quick example I will give you of reinsurance and how this works and how it can affect your association is we had one association in Lake Oswego, beautiful association, newer association, about 10 years old. One building valued at $25 million. The expiring premium was $25,000 on that building. The reinsurance the carrier paid on that $20,000 was $3,500. On the renewal, the reinsurance went up to $17,000. So the carrier was forced to offer a non-renewal because they could not increase the rates enough to justify staying on the account due to reinsurance. Now, keep in mind, admitted carriers are coveted by the state that they can only increase their rate or decrease their rate by so much. And because, say, they can only go up 10%, then they're forced to offer a non-renewal. And this was a beautiful exposure, had no claims, but because of the reinsurance, the carrier was unable to offer renewal. So we had to go out and find another option for them. Another thing that we're seeing is carriers' claims reserve. They need to have a 4-to-1 ratio, meaning that they need to bring in $4 in premium for $1 in reserves they have for claims. As these claim reserves get bigger, they're forced to increase that ratio or they lose their AM Best rating. And that is also causing carriers to push up their premium because of that. And then carrier restrictions and underwriting. We talked about filing rates with the state. There is a limitation when you're an admitted carrier. You can only increase your rate by so much or decrease your rate. So what we're seeing a lot of carriers doing is one way to increase premium and keep the rate the same or do that 10% increase is increase the building value. Actually, what we're starting to see them do is increase those building values to what they really should be. Historically, the insurance industry, when it comes to property insurance, has undervalued their buildings. We would typically see 5 or 6 years ago to where a wood frame building would be valued about $125 a square foot. Now we're seeing those values at $200 a square foot, which is more realistic to where the replacement cost is. So that is another reason we are seeing increases in premium is building values are increasing as well.
Before we move on, I'll just jump in and say that the underwriters are also, their hands, carriers' hands are tied also by the reinsurance. And so if reinsurance markets have stipulations on the insurance that carriers can write, that also can really affect an association's renewal. You know, something that they used to be able to write before, maybe a non-sprinklered, now is no longer eligible because the reinsurance requires various aspects and things. So that really can also play into this and be an issue for a renewal.
So this is what we're predicting for 2024. Carriers, what we're seeing, carriers' expectations have increased. There's underwriting scrutiny. I know the property managers have seen more requests for information from us, and I'm sure boards have experienced the same. They want inspections on roofs, sprinklers, plumbing, structural on older buildings. This is a new one on mid to high rises. We have some carriers actually asking for a structural engineer report. This has to do with the Florida Champlain Tower collapse. Now that's being integrated into underwriting. So some of the mid and high rises, we're starting to see requirements for structural engineer reports. And as a board and a management property manager, you should consider doing, just because one carrier asks for it, we're seeing this as a trend that eventually it will be a requirement for all carriers, especially on older buildings. What we anticipate as far as increases this year, I really, from what I've been reading and have been told and talking to different companies across the country and reinsurers, is they feel that we have hit the apex of the hard market in 22 and 23, starting to see a bit of a leveling off in 2024, but they still predict, and what we are suggesting is for boards to still budget a 15 to 20% increase. Keep in mind that the rates may be leveling out a bit, but building values will continue to increase as well. Another area for consideration.
Keep in mind also, Vern, that's just for preferred risk, right? So this isn't even for high risk. If you find yourself having claims activity or whatnot, this may not be what you need to budget for.
Yeah, and we can see much higher in high risk. And basically high risk would be an association that's had claim issues and the carrier's non-renewing because of that. Or we're also seeing older buildings. That's become probably our biggest challenge, is these cool historic buildings downtown, built in the 20s, even buildings built in the 80s. Carriers now want to see updates for buildings over 25 years old. So that's part of that underwriting scrutiny we're starting to see. And another consideration for unit owners as well, we're talking about the association's policy, but the HO6, we anticipate, and what we've heard is that carriers are going to start implementing up to a 30% increase on these HO6 policies. And one of the main reasons is because of not only the increase in claim activity, but we've seen an increase in deductibles. So whereas historically we'd have a $10,000 deductible, now we're seeing a $25,000 or $50,000 deductible. And most associations have the resolutions that state the unit owner is responsible for any damage to their unit up to $50,000 in this example. So as a carrier that's writing HO6 policies that may be charging $500 a year and all of a sudden have to pay out $50,000 in water damage claims, you can see how that is going to start affecting the pricing and eligibility in the HO6 market as well. Another thing to consider when we're talking about insurance, where we're seeing rate increases, is earthquake coverage. And on this example, we can pretty much say that half of the rate is for the package policy. This is the policy that responds to fire, water damage, slip, trip, falls. And then the other half is earthquake. This is kind of our average association, or what we call garden style or woody walk-up. And so considering that, and where we've seen most of the changes in pricing and capacity and coverage is in earthquake coverage. And the struggle with earthquake coverage is there's really nothing an association can do to get that insurance, to get that earthquake coverage premium down, except for reduce coverage, increase deductibles, reduce the limit. And that's what we're presenting to the associations at renewal too, is instead of going for 100% earthquake, is an option to insure it at 75 or 50%, just to give them an option of reducing that renewal premium. Keep in mind, this example represents, like I said, our average association. A lot of the towers that we insure out there, the earthquake can represent up to 70% of their premium. So they're really getting hit on the earthquake. And earthquake coverage, again, we anticipate, I've been told anywhere from 10 to 30% increase depending on each individual if it's high risk meaning that if you're in a zone that's got a lot of that's more prone to earthquake or liquefaction concerns closer to the Willamette or the Columbia River, those tend to be a little more high risk for earthquake opposed to the ones that are in solid up in downtown Portland. So as it says here, earthquake insurance can be over a third to actually 2/3 of the insurance budget. Another thing with earthquake to consider is alternatives consideration. I did mention that instead of insuring for the full amount, we're seeing associations, boards making the choice to reduce the limit. And there are options out there that we are starting to see. One is a parametric policy. And basically what that is, just to briefly explain what it is you buy a policy on a building. It's good. It's typically used in old buildings in other parts of the country down in California and high earthquake zone areas. The reason why it's used on older buildings is they don't do any underwriting on the construction type of the building. What it is, it's a policy that you're paying, say, I want a $5 million policy, parametric policy. So they charge a premium for this. And then they have certain triggers. And basically, if you hit if there's a quake and there's certain Richter scale numbers, so say if it's a 7.5, you may get the full amount. If it's a 3.5, you get half of the amount. They give the money to the association. They don't have to rebuild. They can do whatever they want with the money, but that's basically how a parametric policy works. In my experience, I have gotten a few quotes on some of the older buildings because that's really where the earthquake insurance is extremely expensive. And as of yet, it still hasn't panned out to make more sense to go with the parametric policy. But we continue to consider this as other carriers get involved in the parametric world, then we may see some of those rates become more competitive. And another coverage that we see that's also used in California a lot is unit owner assessment coverage. This is basically a policy that is at the association's level. So it's not a policy that each individual unit owner goes to their carrier and get, but is designed specifically for your association. And then they figure out what the total assessment is in the event of a total loss for unit owners. And then you can buy high levels of loss assessment coverage. The problem that we're having right now in Oregon, we have placed a few of them, is getting the carrier that writes this in California, unfortunately, writes a lot of the earthquake on association buildings. So they don't want to be the ones writing this loss assessment and then also insuring the building. They have too much exposure. So we are working with the company that has this program, and they're trying to find another carrier that would specifically write this for Oregon.
All right, let's talk about defining the ideal association. We created this and came up with this concept because it can help associations understand where the standard is, what associations are looking for. Associations, it's great when you do projects, but if you have 4 or 5 that need to be done and you're only doing 1, it's not necessarily good enough. We've seen this happen where piping projects have occurred, but yet the building isn't sprinklered. And so the association has said, but we repiped, we've got all that. So shouldn't we get lower insurance? And although there is something to be said about that, and I applaud those efforts, when you look at underwriting and some of the qualifications that are occurring now, it just may not be enough. And so associations really need to be creative and look at where their deficiencies are in their association to start making a plan and figuring out how do we get this updated or get a better process in place, whatever it may be. So looking at the ideal association, I first want to say that let's look at this quote from Dawn Bauman. She's at CAI National on the national level, and she is the Senior Vice President for the Government and Public Affairs. And this is really more of the legislation aspect and whatnot to a community associations. But she says the cost of living is increasing. The community association isn't just a mortgage, it's the cost to maintain and to make the building safe, along with appealing. So I think a lot of times, owners may think, I pay my dues or I pay my mortgage, that's it. It's more than that. And we have to get everybody on board to understand this concept. And I think that, if we can, hopefully we can move mountains and be able to do more. With that, ideally, the insurance companies want to see that an association is loss-free. The point of an insurance policy is to cover you for unexpected losses that you really aren't supposed to be able to bounce back from. They're for these catastrophic losses. They're for massive fires, massive, trees falling and breaking through buildings. It's not meant to wait for something to break and then have your insurance policy pick it up. And that's kind of where it seems that we have led ourselves to. Owners, boards, just, pushing off maintenance. You see this a lot in units themselves. That's where a lot of activity comes from claim-wise. 90% of claims are from within the unit. So, a lot of that activity is oftentimes because of lack of maintenance, not replacing items like we should. And we're going to talk about that a little bit more in claims. Lower rentals. Ideally, the associations want to see less than 20% rented. This includes no short-term rentals. They don't want short-term. So that's just going to be a statement there. But lower rentals, these associations are, condominiums, they're townhomes. They're supposed to be meant for owner occupied. They're not supposed to be apartments. So when you get to the point where you have more rentals than you do owners living there, we see this often at the coast, but it becomes problematic for the insurance companies. And a lot of the reinsurers won't allow the short-term rentals as well. So just lower rentals under 20% is really the ideal number there. A well-funded reserve study and updated. So, we were one of 9 states that mandated reserve studies across the nation. When Champlain Towers collapsed, this changed. Legislation went into many other states, and we will see this probably nationwide, that every state will adopt this, that reserve studies have to be done. And then there is stipulations on how much they have to be funded. I put in here well-funded, but I'll tell you that there are states, Maryland being one of them, that just passed legislation this year that said that not only do you have to do a reserve study within the next 3 years, it has to be 100% funded. I don't know if other states will follow this, but legislatively, this is something to think about and make sure your association's reserve study is funded and that it's continuously updated. A lot of our carriers are asking us for the reserve study and to give it to them. So now it's something that they're reviewing and looking at through the underwriting process. The other important thing is following the reserve study. When your reserve study says that you need your roofs replaced, getting a contractor involved and whatnot is wise. I'm not a contractor, so I'm going to leave it to them. But we get asked these questions, and as your building ages, you want to make sure you're following the reserve study. That's a really important part, and we see this all too often where things get pushed out because other stuff comes up, but that's only delaying, and it's a domino effect. So with that, inspections are really important as well. Roof inspections are a must. If you have any roofs over 20 years old, it doesn't matter if you have a warranty on that roof. It doesn't matter if that life expectancy for the roof was 50 years. If it is over 20 years old, any type of roof, the carriers want to see a roof inspection report. To be honest, it should be being done. The boards are oftentimes responsible for roofs. And so therefore, when you have roof leaks that are occurring, that can be a liability issue for an association. If you're not maintaining your roofs, then you could potentially be liable. So making sure that if you don't have roof inspection reports done or roof inspections done, or you're doing it spotting, we're just doing this one roof or that one later, you really need to be considerate of getting them all done and making sure that you're following this timeline. Also, we see a lot of times owners are responsible for roofs, and the association, then says we don't have a part to play in this. The carriers are not going to accept that. They want to see roof inspections or they want to see them replaced. So you got to provide the evidence so that we can then give that to carriers, but they are asking for some of that stuff. Exterior and decks are really important as well. I threw this in there really as we've seen a lot of collapse claims, not ourselves, but across the nation. It's not just Champlain. You've seen other buildings, decks collapse in the news and whatnot. It's really important to get these structural components inspected, and not just inspected. Once that inspection report comes back and there's something wrong, you as an association need to take action immediately, or you become liable if something happens, whether that be somebody's property is damaged or somebody gets hurt. And the last thing an association wants is somebody to get hurt. That's a much bigger lawsuit than just trying to take care of the problem itself. So, exterior and decks really are becoming a problem. Landscaping, I put this in there for a few different reasons. We're seeing a lot of trees. Last year and the year before, there was some windstorms that occurred. We had one association that they had 300 units, and 80% of their trees had some sort of damage to it because of the windstorm. So making sure your trees are being inspected, that they're looked at by your landscaper. If they are not doing this, get that into the scope of your contracts, because this is how you reduce your liability as an association. When an owner comes to you and says, hey, this tree damaged my house or damaged something of mine. Tree roots are another really problematic issue with associations. And they're causing damage. I've seen 2 claims just this year based on lawsuits from that. So it's a really big issue. Make sure that you're pushing this service to the landscaper and that this is getting inspected. Responsive to loss control requirements. We see this a lot of times where associations just don't respond or want to not fulfill the entire requirement. The carriers are giving less and less leeway with these requirements. They want this work done, and sometimes they don't give very much time, but in their eyes, it should have already been done. As a board, you have a fiduciary responsibility to make sure your association is top notch. And if there's concerns, you got to be able to write that down and have some sort of process for that. So when a loss control requirement comes out, it's really something that just needs to be looked at immediately and done immediately because it should have been done. And this is also where Vernon talked about the newer buildings. So ideal associations, the insurance companies, the sweet spot is anything newer than 25 years old. We have a lot of, carriers that come into the market, and a lot of their sweet spots are these 25 years and newer. Anything outside of 25 years and older, like Vern said, the roof updates, the plumbing updates, the electrical, heating, they want to see those done. And I get it. Most associations are not rewiring something built in the 80s. You're not rewiring, you're not replumbing, but the buildings were not built to use the same usage potentially to have the same capacity. Maybe you have old wiring like aluminum, or you have galvanized piping, which is common to fail. These are all known things. It's not going to be acceptable anymore. And as preferred carriers, and they already have, many of them, if not all that I know of, will not write galvanized pipe, will not write aluminum wiring. So you find yourself only being able to find options in the high risk, and therefore you're paying the premiums for that. I'd much rather see an association spend this money, and it could be 100,000, 500,000, or $1 million, but understand what you're going to pay to the insurance company, and you're still going to have to fix the problem. So that's not going away. I'd much rather see you put that money to the solution than to pay the insurance companies. So, really the big key takeaway on this slide is that the insurance companies want to insure the best risk, that the ideal association is a less risky association, and that associations can't expect the insurance companies to provide low rates when they won't reduce their risk. And so there's this balance here, and understanding this is really key for associations to get themselves in a better position to be insured, and that will essentially help their financial position with regards to their premium. Vern, you have anything to add on that slide?
Yeah, I would like to press a little harder on loss control, that everyone understands the importance of it, especially in this marketplace, because if there's a loss control requirement, and we'll say that there's potholes, and what carriers do is they go out and inspect the property to help the association and prevent claims, because the carrier is going to be opening up their checkbooks if there's claims. So they go out there and inspect, okay, fill in the potholes. And what we get, because I work on the renewal end a lot, is a lot of these aren't done, and then it becomes a bind requirement at renewal. So then you've got 30 days to get it done. And in some cases, the boards choose not to do it, so the carrier does not offer a renewal. They're non-renewed. So now we have to go back out to the marketplace and try to find coverage. And one of the questions on the applications are, has this building been non-renewed? Is it being non-renewed? And then we have to explain why it was non-renewed. So then that requirement becomes an issue for us marketing. So loss control, pay close attention, as Sarah mentioned. Make sure that you respond to those quickly. Don't wait to the last minute, especially if it requires repairs. We've seen this historically. Well, I can't get a contractor out here, or it's in the winter time and we can't do it till summer because it's pouring concrete or whatever. Just make sure you pay close attention to those loss control requirements.
Yes. Okay, so this kind of leads us into talking about creating this balance between the association and the owners. There's a few different things to talk about on this slide. Just understanding the concept of, what do owners have to do and what are they responsible for, and what is the association? Here's the thing, owners are not maintaining their units. I mean, I think that we could all kind of agree to this. You have your own, maybe in your association, or as managers, you're aware of this trend. They're not updating their plumbing like they should. They're not updating the components within the unit. I mean, just simply a toilet, and we'll talk about that in claims. But they're just not taking this action, and it waits until it's becoming an insurance claim. So really, one of the things that I've talked about this a lot is a maintenance metrics. Attorneys will draft like a maintenance plan or a maintenance resolution. I love getting your attorney involved, and I do think you need to, but just from a consumer point of view and understanding, we've got to boil it down to the basics. A lot of these resolutions and the governing documents themselves, they're not clear. They leave items out, or they may be confusing. They contradict each other. I've seen some things where an association is responsible for the windows, but another section that says the owners are. At some point, you got to get consistent, because we can't hold owners more accountable if they just are confused and don't know. And don't get me wrong, I don't like taking on things like, I think that the association should not take on a burden, but I really think that if taking on this burden by making it more clear to owners, you then elevate everybody. Everybody knows what that expectation is. And a maintenance metrics can do that. You can be very clear. What does the association responsible for? What are owners responsible for? And really understanding this balance. So I really think that every community should consider putting something like this together. Again, maybe you put it together and then you approve it with a legal, your attorney, but understanding black and white, what people are responsible for, and not just saying the interior versus the exterior, is going to really help out your association. Also understand the balance between association owners. In this example, and I did this on purpose, where you have the association responsible for the roofs, exterior, but yet then the windows are the responsibility of the owner. And you find things, and again, not a contractor, so don't quote me on all this, but I know that there are problems when you don't get the flashing right and you don't do certain things in place, like with replacing the windows and replacing the siding. Oftentimes they do these things simultaneously so that these things can fit together and then not get that water inside your building. But when you're not doing these projects efficiently, and I know there's a cost associated with all this, but you pay more in the long run than you would ever in the short run by just trying to take care of some of these components on an efficiency level, or economies of scale, being able to do it as an association project than every individual owner doing something. And this goes in line with things like plumbing and electrical. You have a building that's 50 years old, or buildings that become this old. At what point are you planning on changing the plumbing? It can't just be an owner's problem anymore. We have to have the association board be holding the owners to a higher standard, or the association needs to look at how are they going to do this themselves so that they can then keep this value and keep this building, as an ideal association to be insured. So with that, some processes that you could look at putting into place: replacement processes for devices, and you would need to define those. I've put a couple examples here: washing machine hoses, refrigerator lines. Many associations took action 4, 5, 6 years ago when this was a much bigger problem. But have you thought about resending this out? How long do these components last? The hoses usually are only 5 to 7 years, just like toilet components. You have a toilet that may last 20, 25 years, but all the things inside that toilet really only last 5 to 7 years. So do the owners have a process and, process in order which they have to get these things done? They have to show proof. There's got to be some sort of process there. Another idea is inspections. And I say to put this in your reserve study because I think this gives the association the ability to do something, especially when it may be the owner's responsibility. So the owners may be responsible for plumbing, but the association's seen a huge uptick in claims for water damage. So maybe the association decides we're going to take it upon ourselves to have units inspected. And so we've seen associations look to put inspections of every single unit for plumbing within their reserve study so that they can then look to find these active leaks and then require their owners to then fix those active leaks before they become a much bigger problem. Snaking pipes and drains, making sure that that's done regularly. You could also add in here with regards to inspections like with the roof and or the gutters, things like that, just making sure these inspections are done. When you do an inspection and that comes back good, let's say the roof is inspected and all is fine and there's a roof leak that occurs, it's much less likely that you can be completely liable because you have done your part in inspecting the roofs. But if your inspection is a year and a half old and we've already gone through a winter season, it just doesn't help the association when you don't have these inspections. So put inspections in reserve study that you can, because this is how you can fund for it. And I think that's the leverage association boards could have. Another great idea is installing water stop devices. We're seeing this a lot with associations that have stacked units, and especially ones that have much higher stories than just maybe one or two. But what water stop devices are devices that will not just notify you that there is water, potential water leaking somewhere, or there's something wrong, but it actually turns the water off. So the insurance companies, you can find these things at Home Depot and, hardware stores, and they'll just notify you, but they don't actually turn the water off. And the insurance companies, it's really not that great because the claims still happen. If you're not able to turn the water off, you're away from your home, whatever the case may be, it really kind of is a moot point. So they want to see the water stops. This is really where you're going to find your proactive measures with regards to water damage. So it's something to think about. They are expensive, but it saves people. I can't tell you how many times I've heard just, this leak happened, but we had a water stop, so we're able to stop it. It does stop things. It's not 100% bulletproof, but if it can reduce 96% of your claims, why wouldn't you want to do that? So at some point, this is very much a long-term solution, but if you can do it, I would highly recommend it. Another idea is a community pre-vetted contractor list. So I see this often where owners will have a water damage claim. They get their contractor in, or maybe they just look in the phone book. And they get someone in there, and all of a sudden there's problems with the claims. Maybe there's price gouging going on. It's a whole disaster when you get people in there that just don't know the building, don't understand associations, or just don't have this experience. So when a community has pre-vetted contractors, and this includes plumbing, mitigation and reconstruction, electrical, any of the sources, and I have some resources that I can give to you guys if you want to reach out, but getting this pre-vetted contractor list so that owners know who to call when something happens is key. So really have that on your website or whatnot, but this is something the board should take action on, and then you pass that to owners. This can really help in just so many different areas. We also see just a lot of contractors coming in and then also damaging the building, not installing something correctly, or they hammer into the wall or into a line and then break something else. So we really need to be careful about who we are letting into our buildings. It is the association's responsibility to make sure they know who is coming on their premise, and that the association is asking and getting insurance from these vendors, and that the association is additional insured. Doesn't matter if they are only doing work inside the unit. This is how you protect yourself when they do something wrong. So make sure these are things that you're doing. And then lastly on this page is the insurance resolution. And understanding what that is, it is going to make your governing documents more clear with regards to what's in there, what owners are responsible for, like the deductible. Many association insurance sections will say they're responsible for the deductible, but it doesn't say what happens when there's multiple units, what happens when there's negligence. There's a bunch of different areas. And what about the earthquake deductible? So you want to really define those things. And I'm also going to say, when was the last time yours was done? If it was in 2013 or 15, you need to review it again and then make sure it's updated. There's always things changing, and you want to make sure your insurance resolution is updated. I always suggest you allow us to have last look, let us have some questions or be able to look at it and give you any sort of feedback and help you with that. So the lawyers typically write it, but your insurance agent should be able to help you with that and giving you some tips. Vern, you got anything on this page?
Yeah, I just want to reiterate the maintenance matrix. The key is to keep it simple. I think this is a very, very good idea. Gives the unit owners an understanding of what they're responsible for. And another thing on the insurance resolution, as Sarah had said, a lot has changed. And also we have a deductible per units for water damage. How is that addressed within the resolution? So a lot of changes have gone on in the insurance industry actually over the past 3 to 5 years. So you want to make sure your resolution is updated.
Yeah, and I'll piggyback off that to also just say, because we're here, if you have an association that has commercial units and tenants inside the building, this is another area that those commercial tenants, whether it is an owner that occupies it or an owner that then rents it out, doesn't matter. Really, if the owner rents it out, you really need it from that tenant as well. But if something happens in those commercial units where they do something wrong, like a tenant, there could be liability there. But if you don't have their insurance, or we've seen this where a claim occurred, fire in a commercial unit, and the contract between the owner and that tenant said that they could not, nobody could subrogate against them. So the association who could have gone after that tenant who started the fire could not do that because the contract between the owner and this tenant said that they couldn't do that. So associations, if you have commercial units, you need to have a process for what are their requirements for insurance, what are the requirements that those tenants need to have, and an insurance resolution, you may be able to put that in there. So that's a really good helpful tip as well. Okay, so I'm going to jump in to some claims really quick. We're just going to go through some of these. These are just the top claims that I saw this last year. I'm going to start off with social engineering claims. This isn't really a property coverage. I put it in there because there's not really another section necessarily. It is your money, so that's, you know, somewhat. Social engineering is when your money is embezzled and you or your manager, we've seen it both ways, have voluntarily given up the information that was needed in order for that money to be taken. So normally your crime and your fidelity policy, you just had your money taken. You didn't give them the information for it to be taken. But if you voluntarily give that, that's not employee dishonesty. And that's where social engineering comes in. So we've seen a handful of these claims, ACH forms being asked to be redone, and that's how it's gotten, that's how money's been taken. So have protocols with vendors. We've seen this. It's not just the association or the manager. It was a vendor that was hired from the management company, and that vendor had taken information and changed account information. And now all of a sudden, the association dues were not going into their account. It was going into the fraudulent account. And so this is a vendor, not a manager. So, you know, these social engineering claims are not meant to cover vendors. You as an association, and do not rely on your manager. You as an association have the obligation to look at all those contracts, make sure you understand what's in them, make sure there's standards and protocols for things to be followed. You know, a two-step authentication when people are asking for changes is not a bad idea. Actually, most insurance companies highly recommend it and or require it. So make sure that you look at that. Next, frozen pipes, sprinkler lines. This is very common. I'm going to say this with the freezing temperatures coming up. Check your pipes. Make sure, you know, you may not have a lot of time to do anything or take action, but a lot of these were not insulated areas. And we saw some really devastating claims this last year because of the frozen pipes. Toilet clogs are common, backup of sewer and drain. Toilet failures, you got flanges that fail, the hoses behind the toilets fail and just run. They can gush water out. And if you don't catch that early, now it's affecting multiple units. Dishwasher and refrigerator leaks, including with the hoses. You know, there's been a really big uptick in owners just not being home when these claims happen. I don't know why it's with dishwasher leaks, but a lot of times it is with washing machines or that kind of stuff. So, you know, maybe talk to your owners about a process and protocol with regards to leaving your unit. This could include, don't be using appliances. You know, you want to start your dishwasher and leave for the day, but unfortunately, you're not going to be home all day to see if that leaked, and they happen. So, you know, I never thought about this until, you know, seeing all these claims, but now I won't. I will not start appliances knowing that I'm going to leave the home. These are things we just got to educate owners on. Fallen trees, root issues, we've talked about this. Fire, We have seen a handful of fire claims this year. A couple of them, including arson, where somebody has started their building on fire. This, I've seen both cases where just a random person has come into the building and started it on fire. I've also seen a unit owner start their unit on fire. So, if you're in a high crime area, there's something that the carriers are looking at. They don't want high crime. They don't want arson. They don't want these fires, or, we've seen people get into buildings and hit sprinkler lines and now cause gushing water everywhere. The security aspect is something that associations really need to take into consideration. Damage from vehicles is another one. You've seen a lot of stolen vehicles. This just goes to the high crime. A lot of people just running into gates or running into the building. Liability, we've seen a lot of slip and fall claims that have occurred. My message here on this is just make sure your grounds are well taken care of, well documented, that you have regular, people that are going around and looking at this, the community, the common areas, because we're seeing a lot of people come and they'll maybe slip and fall or be clumsy. They're looking at their phone while walking and then trip and fall. And really the associations, the insurance companies are at this point where it costs more to litigate than to just pay what the demand is. And I've seen them, the demands are $15,000, $20,000, and they're getting it because it's more to just litigate than to just give it to them. And that just doesn't sit well with me. I don't like it, but it's happening. So therefore we've got to reduce our risk and not have the ability of letting people, have tripping hazards. And this could be, a sidewalk, that's just raised or whatever, roots, tree issues. This happens. You have to maintain it. Lack of maintenance and common elements. This shows up on the liability side. So like I said, the roof claim, where you have a roof leak that then caused damage. If you're not maintaining that common element, you've been putting that roof leak off, when this claim comes up, your liability carrier will probably pay out. And now you have a pattern that shows you're not doing the maintenance on your association. So why would an insurance company want to insure you? They're not looking to insure ticking time bombs. They want to insure an ideal association. So that right there, you really need to look at, because it actually shows a pattern. We saw some radiation magnetic frequencies. That was a little bit different, but it's coming up. Breach of fiduciary responsibilities, not following the bylaws, not following what the job role is as a board member. Harassment by boards or a particular board member. If you don't have a cohesive board, it doesn't help the association. And so, having that board really be aligned together is helpful. Discrimination is a big one. We talked about this. You really don't have to even discriminate on the typical race, color, sex, religion. It could even just be somebody feeling like they were discriminated against. So it just depends on how that lawsuit is written. Keep in mind, if you do not have defense for discrimination, our policies do, so don't worry. The defense for discrimination is super important, and you need to make sure to have that. ADA requirements, this one came up a lot, parking and unit access, so being able to get to the unit, and boards wanting to fight back or thinking that they can have a choice to decide this kind of answer. These kind of things, get your lawyer involved before it turns into a lawsuit. Really understand what you should be doing in this. Don't bring in your personal opinion or what you think. Go get the answers. These are serious claims. Lastly, on this claims that I wanted to just make an announcement for, to watch out. We just recently saw this where an association had a janitorial company. There was a loss that occurred, water left on the floor, and somebody seriously injured themselves. It was not a good claim. Thinking you have subrogation, you got that certificate from that vendor, no problem. Well, the claim ended up turning out that this company that was hired actually had subcontracted out the work. And so when it came to coming after that company, they actually got out of it because they didn't do the work. They didn't leave that water, so therefore they weren't liable. And this was seriously eye-opening because I understand this for contractors and general contractors. And a lot of times you have language written in those contracts about subcontracting and who takes the liability. Most of the time it's a GC. But what about these other vendors that you don't really think about, like your janitorial or, I mean, it was janitorial on this one. I'm trying to think of other ones, but there could be outside of contractors. Make sure that your contract is good is really the bottom line here. In this case, the contract was one page. There was nothing stating anything about this. And they had hired another company. And so I can see a lot of companies doing this as a way to get out of being liable and just trying to get a quick, skim off of the top to make their profit. And so, this was really eye-opening. Keep in mind, go and review your contracts. That should be another action item here for associations. And I mean associations, again, your manager is there to help you with day-to-day tasks, and they have a scope of work, but you cannot rely on your manager to do everything. It is just not realistic. And really, the boards need to be elevating themselves and making sure that they are doing this. You are the point contact. Your manager is just helpful and facilitates certain things, but you as a board have to step up and make sure you're doing these things too. Anything on claims, Vern, before we flip it over to our association wins?
Just real quickly on property claims, Sarah had mentioned preventative measures on the previous slide. Keep in mind, increasing a deductible is not a preventative measure. You still have the claim. All property claims, liability claims are a nightmare. And we really want to pay attention to those preventative measures to prevent claims, not necessarily to shift them off to some other party.
Yes, great point. I think increasing the deductible is what the association can do as an action item to help get their loss ratio under control, but it's still not going to solve the problem. Like we said, are owners updating their units? Probably not, so your problem's still there. So let's talk about some association wins because it does happen. Firstly, let's talk about association number one. We had this association had just a devastating loss, and this loss was it blew my mind because only 2 units were damaged. It was from the instant hot thing on your sink. It had leaked. It leaked a lot, and it had damaged 2 units. All said and done, this claim ended up being $340,000. And I thought to myself, is this just a total gut into these units? But when you have high-end products in units and, a lot has to be replaced, the dollars go up, the damage amount can go up, and it goes up fast. And so in this case, it was already, and we were also, let me also say on this one, we were notified 3 months after the date of loss. And at that time, it was already getting up over 100,000. So, understanding what your deductible is and understanding where your association policy is going to trigger is super important because the insurance company was very upset about this delayed claim, and now that they're on the hook for a $340,000 claim, they are trying to subrogate because this one was installed a month or 2 prior. So that's lucky for the insurance company if they can get that back. Most claims do not have the means to subrogate after a liable party. So in this case, if there was no subrogation, this carrier would be stuck with that payment where they had maybe only received 20 or 25,000 in premium. This association did find themselves getting non-renewed from that carrier, and they were forced into the high-risk market, and their insurance went up 316%. For this association, they were pretty small. So going from something like, 30,000 up to 110 is detrimental. You don't have that kind of money in reserves that are meant to be spending to this insurance companies. What this association did was they took drastic measures to fix the problem or fix what they could. They ended up installing water stops. They got somebody to come in and inspect all the units for any active leaks so that they could get that fixed. And then also they then had these water stops installed in every single unit so that they could try to control these things. By doing so, they did this in a 9-month period. So by the time their next renewal hit, they had worked with this carrier that they had just paid out this this large amount from. They were able to find themselves back into the preferred category, and they reduced their premiums, overall premiums, by 492%. So they found themselves cheaper in premium than where they were prior to that loss. And I find this to be a huge win in so many different areas. But this board took action. These owners understood the problem. The owners had to pass this because the association paid for it in advance so that they could get this done, so that they could work with the carrier on getting these things done so that they could try to get back into the preferred category. And I'll tell you, it came down to the wire. It really did. But the carrier came through. The association came through with what they promised they were going to do. And so did the carrier. We got very lucky on this one. It was outstanding. So, Vern, why don't you talk to us about association number 2?
Yeah, this is a beautiful high rise that we insured, and we have insured it for quite a few years. And they had a water damage claim, of course, on the top floor. That's where those always happen. And it was a sprinkler head that broke and did $575,000 worth of water damage. And the carrier who insured this building was getting out of the condominium market. This is probably one of the reasons, but they did not offer renewal terms. So we had to go out to the market to try to find a carrier that was interested in insuring this association. The challenge on this renewal was no one knew why that sprinkler head failed. No one knew. The claims adjuster didn't know. The management company, the board didn't know. So that renewal was very challenging. I mean, just imagine being an underwriter and putting this in front of their desk and saying, yeah, they had a $500,000 loss. We don't know why it happened or how it happened. Will you insure this? So we did get one carrier willing. We did get one carrier willing to insure it. High deductible, high prices. And then the board took action. Immediately, they hired a forensic engineer that specializes in sprinkler systems. And they found out what the problem was. And it had to do with a design problem with the sprinkler being close to the roof and the expansion and contraction of heat to the roof. They spent quite a bit of money, about $250,000, to get this fixed and repaired. But they got it done as quick as they could. And the premiums ended up reducing 140%. Now, one of the reasons we didn't get back down to pre-claims is their earthquake premium went up. So their property policy went down substantially. But one thing we do want to explain on these, both of these associations are ones that we insure, and we deal with this with our association. There's one I'm dealing with that had two horrendous claims right before renewal, and their premium went up substantially with a very high deductible. And it's very important, and how we explain it to our boards is, right now you're in insurance hell and we're here to help you navigate through it. I can tell you on this association number 1, I think Sarah all but went out there and helped install these sprinkler systems. She was very instrumental on getting all of this done. And we were very involved on association number 2 on helping the board. What do we need to do? Just kind of help guide you through these challenging times, because there are times when associations have losses, a lot of claims over a short period of time, and then they find themselves in quite a dilemma. And you need to have an agent not just giving you a more expensive insurance quote, but also sharing with you preventative measures, things you need to do to help get out of this situation.
All right, we're almost done. I have a couple of resources to give you guys, and then we'll open it up to Q&A. First thing is that if you have not heard of the organization CAI, you need to know about them. Oregon has 2 different chapters. There is one here in the Western Oregon side. You need to be a part of them. They do have, if you aren't a member, that's okay. They do have a board leadership certificate class coming up. It is on February 3rd. It is a Saturday. It is well worth your time to be there. There's different modules here. I'm one of the speakers as well. Just really talking about all the different areas that you as an association board need to take charge of. So this is your opportunity to be able to ask a lot of questions. If you sign up in time, which I think you have to sign up in the next week or so, you actually get a packet in the mail that you can have notes and all sorts of stuff on. So that's the link and we'll send you guys this PowerPoint so that you guys have it as a resource. But that's the link there. Sign up. You'll also see it in my newsletter as well. Another thing I want to point out to you guys is the CAI Foundation for Community Research put together this best practice book. It is a book full of maintenance, guidance, requirements, and recommendations with regards to your association, best practices. This is free. This link that I have here for you is free. You get to go and download it, and now you can use it for your association. It is like gold. So this is a great resource for you to utilize and start implementing some of these things into your association. And to be honest, it just got redone. There was some that got done, a revision to this after the Champlain Towers. Both Vern and I sat on that task force to write this. Then it got redone just this last year, some modifications to it. I sat on that committee. Both Vern and I are heavily involved to making sure that communities have resources and not just an expensive insurance policy. We don't want to see that. And then lastly, if you haven't heard about my newsletter, I write it every single month. This was December's. Very good tips. And if you have a question, I encourage you to ask me these questions. I like the questions. I like to be able to incorporate them into my newsletters. Oftentimes when I see a specific claim that has come up, like example here, Claims Corner, freezing point creates breaking point for association, a claim that I had never saw or thought of that association ended up getting denied coverage for because they didn't understand their policy and take action when their HVAC system went out and a freezing storm came. So sitting here now, you guys got to make sure that you have your buildings heated. And you know, we're coming into some cold weather, so please do not delay. Make sure that you have some of this. Sign up for the newsletter, and also I encourage boards to send this out to every owner as well. The owner, this really is information for owners. I do a Q&A, an owner's question, and an update of the month. These are very much driven for the owners themselves. So if you as a board encourage them to sign up, then that is another reason, another resource that you've given them that reduces your risk and liability. And with that, I'll open it up to some Q&A. I'm sure that there is some questions here. I'll go and check out the chat. But please do, if you want to raise your hand, we'd be happy to answer some questions if you want to verbally ask them. So Bob Mulkey has asked, would high risk also include those in fire zones, flood zones, earthquake zones? And yes, possibly. I mean, we've seen a lot of changes in wildfire risk. Vern, I don't know if you've seen any on the renewal side where once before it may not have been, but now we're triggering because there's some brush around it. I think Portland, some of the areas in Portland even.
Yeah, I try to explain to underwriters we live in a rainforest, but sometimes they don't buy that, so.
Yeah. Okay, so we've got Holly. Do you offer any analysis of building to help the board determine how much earthquake coverage they need? She has some other questions, but that's a good question. Vern?
Yeah, there is and I know mostly with the high rises, we ensure that they have commissioned a structural engineer to do a PML, potential maximum loss study on the building. This is a statistical study that kind of evaluates the building construction type, soil, and and they write up a report on how your building would respond to different seismic events. And so there are definitely additional materials out there that boards can purchase or have done analysis of their building. I think it's beneficial, especially when you're reducing your earthquake, then you have some information in which to determine how much you should reduce it by, outside of just using a dollar amount and reducing it to what you can afford.
Yeah. She also asked about the earthquake coverage for associations and really the deductible by having, you know, sometimes for some associations, it's millions of dollars in a deductible. And that could be even you having the lowest deductible that you could get, like 3%. And, you know, trying to make sure that owners have this earthquake coverage in order to pay for the deductible. And, you know, is there anything else that they should consider? I know that there, and maybe Vern, you have some more information on this, but like deductible buy downs and different options like that, unit owners could purchase this earthquake loss assessment coverage. But really, this is an owner's responsibility.
Yeah, and oftentimes, you know, they do have, owners can purchase earthquake loss assessment coverage. The problem with that is when you get, say, $100 million building with a 10% earthquake deductible, then that loss assessment responsibility to each unit owner is could be fairly large, or if an association is not insuring for the full amount. The problem with earthquake loss assessment in the marketplace right now is it's very limited. It's my understanding the maximum you can buy is $100,000 as a unit owner. And oftentimes your responsibility could be much higher than that.
Yeah. So a couple other questions. I'll get to you, Bill. I'm going to just answer a few of these in the chat. How often should plumbing get done? Roof envelope. This is a good question for the contractor. I know with roofing, as it gets older, annual inspections really need to be done. And really, to be honest, if you're they should be done when you're being maintained. So if you have a maintenance plan for your roofs, you know, inspections could be done at that same time. It doesn't make sense to me why a contractor can go up and maintain, but can't take a look for what's going on. Again, not a contractor. Ask them what the requirement is. I know specifically for roofs that it is annually for the most part. When it comes to the envelope, I'll just say one, if you're a brand new community, under 10 years, so statute of limitation, definitely get a building envelope inspection done. You want to make sure that if the developer did something wrong and there's some sort of defect, that you're going to be able to go after them. Please do this. And it should be done in like year 2 or 3. Don't wait until 10 years. Make sure that you are doing these. I've had a couple of claims just this year, even a frozen claim where we had ice damming claims on a roof for a 2022 build. And I just, you can't be having these. We cannot have brand new associations starting off with claims. So make sure that there's no defects to the buildings. But when it comes to these inspections, you know, the building envelope, things like that, ask the consultants. I mean, I would guess every 5 years. I really don't have a specific answer on this. I just know that we don't want to wait to find the problem when there's water damage inside somebody's unit. And then you determine it's a systemic issue. Not only is it on this building, but now this could happen to all the other buildings. So you really have to make sure that if there's a loss in one building and it's caused by potentially something from the exterior or something the association is responsible for, that you're taking a look at not just that one, but potentially every other issue. Another question that came in was examples on loss control. Vern, you might have some ideas of recent ones, you know, sidewalks being repaired, fire extinguishers are common, tree roofs hanging over buildings is common. What are some other common ones that you've seen recently?
A big one is sprinkler inspections on buildings that have sprinkler protection in them. That's a big one that we never used to see. Now it's a requirement for some of the carriers.
Yeah, that actually, now that you say that, there is a couple that they don't have the inspection, and now here we are 30 days. We've had notice of cancellations issued, and now this board has 30 days to figure it out. Another point in this for loss control is if you're having an issue with your contractor, they're delaying the response, maybe getting you what you need, or they don't think that they can get to the timing fast enough, you figure out what resources you have. Who can you reach out to? Your manager? Could you reach out to your insurance agent? We talk to so many people that if you need a resource or a recommendation, I'd be happy to give you guys one. And I'd be happy to even track some down. And really, that's what I ended up doing for this other one was I found a different sprinkler person through CAI contacts and was able to give this association a different name and a different resource to then hopefully be able to get this work done. But these loss control requirements are, smoke alarms, that's another one. So it doesn't matter if it's inside the unit or not. They're insuring the whole building. So you got to make sure that everything is good. If the city doesn't respond to a sidewalk graded flower bed issue or approve, can we subrogate against the city? That's a legal question. I wonder if the insurance company would go after the city. I know that they oftentimes self-insure quite a bit. And I just wonder how they can get out of a claim being such a big entity. So sidewalks that are really the city's, but you're required to maintain is a huge point in this question, is that if you have these kind of sidewalks, you have to maintain them. You have to make sure that there's not tripping hazards. And again, like some things you can't always control, like somebody looking at their phone and walking and then falling. It happens though. This is where security cameras are crucial for associations because they tell that story and then they give you, that adjuster, something to stand on to try to help defend you. So I do think that that's a good question for an adjuster and or for an attorney if there was a big claim to go after. I just wonder the success on it, given that it's the city. You're suing a city and an entity. So why wouldn't that loss by covered? So Peter, are you asking about the loss within the claim corner section? If you're talking about that, I can go over it. This association essentially had a clubhouse. They had an HVAC breakdown, and it was in November. They were working on getting it fixed, but because of delays in parts and the installation, they could not get it in. They didn't get the part in until, I think, January. But in December of last year, we had we had the December 24th frozen event, and then we had the 27th wind event right after that. Anyways, they had pipes break inside the clubhouse because the HVAC wasn't working. There was no heat to it. But within the policy, it specifically says that if you do not have heat, you need to either maintain heat and this print is so small, it really gives you the requirements of that you have to maintain heat. So really this association had gotten denied claim. And when asking the adjuster about it, I said, so you would rather than put in a space heater, which could be more risky than just leaving it the way it is? And the answer was yes, you have to maintain your heat. And in the policy said it. And this was CAU. CAU is the easiest policy to read. Most policies have your head spinning. CAU's is so clear, and it was very clear. There was nothing that I could do on this one for the association. They knew about it. They knew about it in advance. They knew about the frozen event. You can't be naive. Like that didn't work. They should have known about it, and they should have gotten the heat in there, knowing that this event was coming up, and so therefore it was denied. It was pretty unfortunate. It was eye-opening. These do happen. This is why I try to teach about them. Okay, a couple other questions. Let's see here. How can boards enforce aluminum wiring removal updates required by insurance with homeowners? Great question. And Vern, you and I went through an association that had this, where unit owners are responsible for the wiring, but everything was aluminum. The association found themselves, actually, they were with CAU and they got non-renewed because of this aluminum wiring. Vern, you want to talk about that?
Yeah, and they did end up, I think what they ended up doing at the association level is hiring a contractor to get everything replaced once the unit owner started seeing how much the insurance cost was, because we would much rather have you spend money on preventative measures than insurance policies. And that's what they ended up doing, replacing all of them. in the association.
Yeah, they did work with their attorney, and they did have to be careful because, you know, this was the owner's responsibility. But this goes back to this balance between association and owners. And I know that the lawyers, the easy answers, but that's the owner's responsibility. But it's becoming a problem on the insurance. So you can't have both worlds here. We've got to find a balance between what the owners are responsible for and those things that are affecting the insurance. And so it can be done. Talk to your legal. Bring in your insurance agent as a source of ideas and help, and or to really push that message, because that's really what helped sell getting this through. Because when they saw these numbers and they saw, look, it's not going away, you're not going to get back into the preferred unless this changes, it really can solidify with them. Lastly, let's see here. We are going to try to send out this this recording, so you guys should have it. Send out the slides as well. Do you have experience with the necessity of inspectors inspect state of sewer plumbing from association building through private streets and city sewers? I know that associations need to do it. I know that it's common to think like, oh, this is the city's line, and so therefore we don't have responsibility to this. This is a good contractor question. I don't necessarily have any sort of experience in it. I just know that it needs to be done. And this does cause backup of sewer and drain claims. This also can cause breaks in pipes, which may not be an insurable event, but you're still going to have to take care of. If you have concerns, maybe talk to legal, ask specific questions. I don't know if Bill is still on here. He may have had to leave.
Yeah, I am.
Oh, there you are. Hi, Bill.
Hi. It's not so much of a question, but since reinsurance is driving so much of the rate increases, I saw an article in the Wall Street Journal today that talked about, for the first time, there's going to be reinsurance for the reinsurers. And that sounded promising. That sounded like a ray of hope. I don't know if you know anything about this.
Yeah, it's typically called facultative reinsurance, to where the reinsurance buys insurance on them, on their exposure as well.
And it's becoming, in some cases, it's expensive. I know, Vern, you've had a couple of cases where the faculty of reinsurance can be more expensive or not available in all cases. So are there any other questions? I was just putting some of these links in the chat just so that you guys had them available sooner. No other questions? Please feel free to speak up. This is your time to ask anything. Help out other associations. We're so thankful for you guys to be here and wanting to learn. This is not an easy topic. It's usually a big part of association budgets. And you guys have to bring back to your owners these answers. But really, what I would love to leave you with is that we've got to elevate our owners. Everybody is a part of this. You are an owner too. You're just on the board helping to guide this association. So how are we elevating owners? And really, we just got to hire our standards. We got to get better processes, better plans to implement. And this does involve education, but that's a part of it too. You may not get owners to agree today, but how do we get to that agreement? And sometimes that takes a little while. We had one association, a high rise. They're doing this brilliantly. I just give them so much applaud that they're getting the water stops installed. And the way that they're doing it, they've got through years of education, 3+ years of education, they've been educating all these owners on water stops and how to get them installed and what you should do in this company and all sorts of stuff. And, slowly they're getting there. I think they're about 55, 60%. They're getting to the point where then once they get 75% installed, they now have majority vote. And now they can get the other 25 to now do it because it's now a vote and a pass through the community. So brilliant idea, doing those kind of things, but it took them a lot of effort, a lot of meetings, a lot of PowerPoints. Both Vern and I have been involved in so many of them, but we're doing that because this is better for that community. And so I just leave you with that and let us know if you have anything else, you need anything else, we're here to help. Oh, Anita, please unmute yourself.
Okay, I think I'm unmuted now. Say, Sarah and Vern, thank you so much. I had a question about that, how fully to fund the reserves. This is a topic that seems to come up. And I don't know, maybe if your professional organization has a recommendation. I'm shocked actually to hear that a state would place that at 100%, because part of the logic of not funding completely is that if you force current owners to fund completely the future repairs, you're not allowing for them to sell and future owners to have to partake in some of those costs. So to me, it seems more reasonable. I know like 30% or 35% seems kind of low, but 50% seems more like an average we can all live with, and you won't be caught unaware of some consequence or something. But anyway, is there a professional standard we can look at as well when this issue comes up?
Yeah, I mean, this is where I think your reserve study expert is going to be somebody that you want to rely on. And I'm going to say the reserve study experts vary. You don't really have to have a license to become a reserve study person. This could be your management company, which I don't always agree with, because you really just want an outside opinion and an unbiased opinion with your vendors. So when you have all that lumped in there, I just can't tell whether that is or isn't. And so I just really think that it's meant for the experts, people that understand how that goes in, not just an accountant, maybe somebody that understands the contractor side of it as well. To understand what that minimum is for reserves, I don't know. I don't know that there's a particular number that association insurance carriers look at. I know with they look at underfunded so that they can see what projects are coming up and how much money do you have. So they can clearly see when you're underfunded. They also look at the budget as well to see, are there any lines that say loan on them or reconstruction or, not reconstruction, construction defect or something on that. When you put that in your budget, kind of not a great idea. Not that to not account for it, but this is evidence that you're showing to your insurance company. And so this is what throws them through the loop when they see some of these issues. So CAI does have some resources, Anita, and to everybody else, that even if you were to go to CAI's website, either chapter, you can see a lot of them will have a membership directory, and they update this every year. Go into the membership directory and look at the various members that are there. These are people that understand associations, that actively are involved in our community associations, that give back. So that would be the best lead that I'd give for you. But good question.
Okay, thank you.
Hey, this is Peter. I have a question. I'm kind of looking for best known methods to look at, maybe, I don't know if it's checklists or resources in two kind of categories. One would be infrastructure. So a lot of the talking that you were giving was around infrastructure and how maintenance and management and forecasting major maintenance will minimize our risk. But that would be one thing I'd be interested in, like an infrastructure best in class audit checklist that you could go over as an association. The other piece,
you guys should look at the maintenance manual. I'm looking at it right now, and I try to show you guys some a sample if it'll come through. But it talks about, you can see kind of checklists here. It's this one is talking about a sample inspection checklist. In the back, it breaks it down. I mean, it goes to monthly, annually, every 5 years. The next page then goes into condos, high rises, single family home communities. I mean, they break this down so much. So the back of this book has some checklists.
Okay, that'd be great to look at. I'm kind of interested though with the insurer's lens with that book, how do they look at it? Because if the association may think they're doing a pretty good job, but I'm just wondering what the insurer looks at from their side of the coin. But
well, so the insurer just looks at, the insurer's looking at it way more basically than, like what this maintenance manual, this is the guide in order to get there. What they expect is that your building is maintained, that it is, like water is not entering in. That's water intrusion. It's not covered. Water should be staying out of the building.
Okay.
Their expectations are that you're really well maintained. I don't know that it's very high right now. It's getting higher. Back even 5 years ago, none of the carriers were asking for reserve studies. Now they're asking for it. A part is underwriting information so that they can underwrite you. So I don't know that that the expectation is terribly high, but they're starting to get smart and more savvy about what is not ideal to them. And when you have losses, when you have claims that refer to not maintaining your buildings, you're being sued, that kind of stuff. It's showing you that you're not a good risk for them to insure, and then they just won't. So I think it's more about taking the PowerPoints that we had, making sure that you're checking those kind of boxes, because that's from really what the carriers look at this point, and then going and exploring more, like with regards to this maintenance manual and whatnot. So
Good advice. One last piece, loss control and security. So how are the insurers looking at, or they have advice around building security systems? Depending on our property, we might have the need for more sophisticated security cameras or entry control and things like that. Is there kind of a separate category for that we should be comparing ourselves?
Yeah, well, so good question. You're not, having security cameras and having locked doors really is a benefit. There isn't so much a cost savings, and maybe Vern, you can speak if there is a cost savings to that.
Yeah, and what I'm
evidence, having.
But what we're seeing on security cameras, especially in the last year or so, it depends on the crime score of where you live. If you have a high crime score, we have carriers that are asking for, what kind of security methods do you have? Are there cameras at the doors coming in and out of the parking, those kind of things? So it is becoming a requirement for some carriers to offer terms, especially in high crime score areas.
Yeah, and the cameras are so key to telling a story. My November newsletter did talk about this. Security cameras as an update of the month. And the reason why is to have, it's not just maybe what the association has, maybe an owner has a door cam or a dash cam. If you can get this evidence and be able to see a potential claim that occurred, that's going to help the association. So, just this, we're living in a world where it's just a really uncertain with some of this crime, with what could happen to your property, and the security cameras just help you be able to tell a story and to defend yourself in a sense. So it's becoming more important, and I do think it's a good tool if your community can have it. I know it's very expensive sometimes, depending on your association, but it has helped out associations.
I guess I'm kind of selfishly asking too, like if we were considering upgrading our security system, should we consult with our insurance agent before committing, because we might be missing out on something that would be helpful to our premiums, for example?
You could. And Vern can speak to this too. I don't know that your insurance premiums are very heavily directed to the security. It's not like within your personal lines policy where it's like you have claims free, or you have you get all these discounts. Commercial insurance just doesn't work like that. They do take it into consideration. So it comes down to negotiating efforts. This is a great added measure that we can then negotiate on how we can get better terms for your association. But correlating it to a specific dollar amount, I don't know that it would that would happen, but I still don't think it's not worth it. You should consider it, especially if you've had an uptick in various crime activity. Then yeah, you might want to consider doing that. We saw this where somebody was entering into the building and was vandalizing the building, or we saw one where they were peeing on the building, and the security cameras were what caught this person going in and out, and them being able to determine it happened to be a delivery carrier. Vern, was it like newspaper or something?
Yeah. Yep. And this person, they were asking if it was a covered claim. Interestingly enough, it was in a high rise. And, they deliver papers 4 in the morning, obviously didn't have a place to go to the bathroom. And every morning they would go to the bathroom in the same spot, causing the pipe to corrode. So anyhow, that was an
although it's an insurance claim, there is a per occurrence deductible. So
right.
Every time he peed, it was a per occurrence event. So it wasn't a cumulative. Unfortunately, this wasn't a covered claim in the sense that there just wasn't enough damage for every claim that occurred. So, but it happens, this is where security comes into play. They could have caught this person, and whatnot. So, and they did, they had some security, so they were able to determine it down. But the high crime, if you are in a high crime area, that is a question carriers are asking for. What security measures is your association taking? If you don't have anything to provide to us, oftentimes they will just decline to quote. And even though everything else may have looked right, because of that one factor, they could have declined a quote. And so I think one of the takeaways here, and what Vern and I really wanted to say was, as we ask more questions and like preventative measures, we need answers. We need information from the board. We can't just make this information up and get you guys an insurance quote. We got to be able to know, what are you doing, so that we can then relay that to the insurance company and tell them what actions you're taking. So just keep in mind, this is on you to help us determine what you're doing so that we can help you with the insurance. So anything else to add? Any other questions before we head out? Okay, well,
Thank you.
I really appreciate everybody. You guys are great.
Thanks, everyone.
Thanks for spending your time here. Have a good night.
Thank you all. Bye.
Thanks, guys.
Bye.
Thanks, Sarah. Thanks, Vern.
Of course.